All right, guys. So today we're going to do a red day recap, which this is the first one we've done for 2017. Certainly had a bunch of them in 2016. Red days happen. I've just been fortunate that up until today, I've had a nice long green streak in the small account. So as you guys all know, I started January 1st with $583, and I built my way up to $22,193. That was my opening balance this morning in the small account, which was um, all in all, I was impressed. I didn't think I would have such an amazing day yesterday. Yesterday I made $7,600 or whatever it was. And I thought that I would be able to continue that momentum into today. And I made one critical mistake. And I'm going to go over that mistake, but the net result is that I'm closing the day down $5,652, which, is 25%. I mean, it's a big haircut, and I'm not happy with it. But at the same time, I'm still net positive on the week between yesterday and today. And this is what comes with the territory. When you get aggressive and you're trying to aggressively grow an account, you're taking larger amounts of risk. And it's inevitable that even the best traders, we're not right 100% of the time. My accuracy is between 65 and 70%. So it was a matter of time until, I got a trade that really went against me, and with big size, the loss adds up. And of course, trading on margin, this is the risk. But all in all, even though I'm frustrated with closing the day red, I'm still thankful that it's been such a good month. I'm still up 17,000 on the month, give or take, and this positions me really well to continue growing my account. And I certainly wouldn't have been as aggressive as I was today if I didn't have this cushion. Because even though I've taken the loss today, I can afford it. I'll bounce back tomorrow, and like I said, I'm still net positive on the week. So let's look at the trade that I took. And we'll talk about the rules that I may have broken. Now, as you guys know, anytime I break a rule, I've got to run 5 miles. And I actually just got back from a 5 mile run. You barely notice it, but you can see the sweat here. And I'm feeling refreshed, feeling in a better headspace and ready to, do a recap of everything that I did today. All right, so let's jump in and talk about RGSE. All right, so RGSE, this is the one that I really screwed up on. And the thing is, yesterday, this is the stock that I made $16,000 on. So it's just, again, this week, the end of the week recap on Friday is most likely going to be talking about how the best trade of the week was RGSE and the worst trade of the week was RGSE because it was the most volatile stock. And it had the opportunity for really, for big profits or losses if you didn't trade it properly. So yesterday, obviously, I got into this one right out of the gates. I got in at 440 or 450 and rode this momentum all the way up to 586. And then one of the things I was saying yesterday in my recap is that this one is worth watching for follow through because if it gaps up a little bit overnight and opens just below yesterday's high, or today, the high of Monday at 586, it'll be worth watching for a break of that high. Now, that's almost exactly what happened. We ended up gapping up pre-market. And when I saw that, I was like, you know what? This thing looks really good for a break of yesterday's high and continuation. Now, I wanted this to hold under 550, and I wanted to get in once the bell rang for a break of 550 in anticipation of the break of pre-market high or of yesterday's high of 586, and then ride that through 650, and maybe $7. What ended up happening is pre-market, it squeezed up to a high of 620. So we had a pre-market high of 622, and so I was like, all right, well, I guess I'll watch it over 622, but I'm not sure. I'm not really sure what I think. This is kind of it's already getting a little extended, but at the same time, I thought this is the one today that could really give us a big win and could give us a big move. So the market opens here, and just to show you guys my P&L here, minus $5,652 after commissions. So obviously not a good day. I took the trade in my speed trader account as well and lost $7,500 there. So combined loss 13,000, and that means I'm only up 42,000 this month, which is disappointing since I was up 55,000 yesterday. And at the same time, most people would be really happy with $42,000 in a month. So having the last day of the month be a red day is humbling. It kind of is a way of keeping me from getting too overconfident, and it'll allow me to start February refreshed, recharged, and kind of focused on trade by trade, one at a time. Obviously today is one of the worst days I've had in over a year, trading aggressively on a setup, and just it is what it is. So I'll talk about the trade. So all right, RGSE. Market opens, and we actually opened at 595, and I was like, perfect, because I want to get in this at 6. I want to get in under the whole dollar. I put my order to buy. I put out orders to buy 6,000 shares, and I was like, this is great. I'm going to get in at 6. It's going to pop up to 650, maybe $7. Well, I only fill 200 shares. So, I was like, it popped up to 650, and instead of being up $3,000, I was only up $100. And this is when and this is in a matter of seconds, really. I pressed my order as soon as the bell rang, filled 200 shares at $6, and 20 seconds later, we're up at 650. And I could have done one of two things there. I could have said, you know what? This is annoying, but I'm just going to wait for the first clean pullback. That would have been the smart thing to do. And instead, I said, I'm just going to jump in at 650. I'm just going to get in at the $0.50. Because I'm basically not in. This thing is running. I'm just going to get in at the $0.50. Now, that's essentially what I did yesterday. I got in at 450. It had already squeezed from 4 to 450 before I even saw it. So I got in at the $0.50, and I just jumped right in. And obviously it worked. Ran up to 650 or 583, whatever it was. Today it didn't work. I got in at 650, and we popped up to 669, and then we rolled over very, very quickly. And in a period of 2 minutes, we were down at 550. I stopped out at 575. So basically, I was watching here for the first candle to go red, and part of me wanted to wait to let it pull back so I could maybe get a red to green move. And I was like, okay, well, when I was down, as soon as I was down like 20 cents, I kind of was like panicking for a moment, because I was like, all right, well, I'm down $1,500 and this is not good, but let's just give this thing a second. It just popped up very quickly. It dropped down. I don't want to sell and then have it run right back up, so I'll just give it a second. Next thing I know, it's at 410, and I'm like, okay, this has just gotten a lot worse, and now I have to decide, do I just mark it out or do I try to see this through? And so far this year, I've had a couple of trades that I was fairly deep in the red, and I decided to see it through. I held through the pullback, and then the first 1 minute candle to make the new high, we went right back up. Remember on DFFN earlier this month that happened, and ended up holding it down $4,000 and then booking a profit as it moved back up. So in this case, though, because I was in the small account and because it broke below $6, I said that I've got to just throw in the towel. I can't continue to hold this. And in fact, that was the right decision, because it ended up dropping down to 530, and that just would have made the loss worse and worse, an already bad loss worse. And so I'm not happy about the trade today. I would say the thing that I did wrong was I gave into the fear of missing out. And that's really what it was. It was the fear of missing out. It was the frustration that I missed my fill at $6. That that emotion sort of took over my trading and convinced me to just press the buy button at 650. Just get in higher. It's fine. And when I was down 50 cents, it was just kind of like, wow, okay, that happened fast. And then by the time I hit the sell button, I was down 75 cents. And so, are there things that I could have done to mitigate this loss or to have made it smaller? Certainly, if I had had an automatic stop, um, 20 cents, that would have taken me out, and I probably would have gotten filled around 620 or 630, and that would have saved me some money. In this case, it would have. Obviously, in the case earlier this year with DFFN, I would have lost 4,000 instead of being green. So, in that case, it worked to hold. In this case, it didn't. But that's really the only thing I could have done is to have bailed out faster once I was in the situation. What I could have done to have prevented the situation is to have said to myself, and this is what I'll say to myself in the future: if you get a partial fill on your desired entry, where you want to get into a trade at 650 or $6 and you only get filled 200 shares, then you can't chase it. You have to wait for the next pullback. It's just what I have to do, because this is not the first time I've actually made that mistake of getting a partial fill, being annoyed that I was in a winning position but only with this teeny size, and then ending up adding a lot higher and then stopping out as it came back down. And it's incredibly frustrating. I know there were people in the room that got in at 6 and sold at 650 where I was adding, because they're like, I'm up 50 cents. I'm going to take some profit. And they did. They took some profit, and they are ending up green on the day while I'm ending up red. So today's one of those days where I'm paying my dues and, I'm taking the loss. This is part of the deal with trading. And, unlike a lot of traders out there, and sorry guys, I didn't show you my P&L for those of you on screen share. You can see it right here. Unlike a lot of the traders out there, a lot of traders are happy to brush the losses under the carpet. And that's the easier thing to do, because it's not fun to talk about. It's not fun to have a big loss, but this happens. Yesterday, making $16,000 was awesome, and I was happy to talk about that. And today, losing $13,000 is not awesome, and it's frustrating, but still up $3,000 on the week. And today was an opportunity to reflect a little bit on my strategies and on the way I'm trading and on how I allowed that emotional frustration to kind of pour into the way I was executing my trades. And I think that by itself is something that I can learn from. And so later in the year, when I'm taking trades, not with 7,500 shares, but with 15,000 shares or with 25,000 shares, I'll be better prepared to handle that share size because because of this experience, and that's kind of what I try to, to say is to people and students in general, is that every time you make a mistake, it's an opportunity for you to learn and to improve your strategy. The problem is not making mistakes. The problem is making the same mistake again and again and again and again. And that's where you really need to address, why do I keep doing this same thing, when it becomes a pattern and a habit. I'm usually pretty good at having that sense of awareness and that mindfulness to recognize when I'm making mistakes or doing something I shouldn't and correct it. And that's something I've developed through my years of trading. So even though today is a frustrating day, I still feel fortunate that I've had such a good month and that I'm able to afford this type of loss, because I certainly couldn't have afforded this earlier in the month, right? I had to be very aggressive to get up to this point, and that did mean taking extra risks. Yesterday's trade was very aggressive, and it worked. Today's trade was also aggressive, and it did not work. But really the problem today is that I chased the initial entry by 50 cents, and I didn't do that yesterday. Yesterday, I got in where I wanted to, and then I rode the momentum. So, something to be mindful of. I know that students, look at my trading and want me to be setting an example. And so that's why discussing these losses are really important because I want you to be able to learn from the mistakes that I make. So maybe you can learn the same lesson I learned today without having to lose $5,500. Now, some of us have to learn things the hard way. And I was probably that way a lot when I was learning to trade. So you may end up having a similar experience and it'll remind you of this, kind of recap that, we're going through today. Um, I was very excited yesterday that I was up to 22,000 and I was like, wow, I'm going to be at 25,000 before you know it. This is fantastic. And obviously I just took a bit of a step backwards. And so I've got to regroup. I've got to adjust. Today's the first red day. It's day 20. It's the first red day of the challenge. And although it feels like a big step back, I'm actually still further ahead than I was yesterday morning. I just wasn't expecting to give back so much of yesterday's profit. And I, of course, wish I hadn't. And I am frustrated with myself. And I'm definitely going to be my own my own worst critic in this sense that I'm up 42,000 and I'm not happy about it because of the way I ended it with a mistake, and so hopefully that helps me improve my trading so next month can be even better. And when I take bigger share size like 20,000 or 25 or 30,000 shares at some point, which I'm sure is inevitable with scaling my strategy, that I'll be better prepared to handle those share sizes and to make good decisions. Because this is a trade where really in a matter of 2 minutes, I had the potential to either make, $1,500 or $2,000, $3,000, or lose, 10,000, 13,000 or more. And this is a trade where I'm sure short sellers probably in general would have done better than long biased traders, but that's just part of the deal. I think one concern with RGSE is that we didn't have a fresh catalyst, number one, and number two, it was already pretty extended pre-market. Those were two warning signs that I recognized, but I think that I wanted so badly to get us to a repeat of yesterday that I was willing to just kind of be aggressive. And I was thinking again about how, well, last time RGSE had a big day, the following day it gapped up and just went even more. Maybe we're going to see the same thing today. Other traders might be thinking the same thing. And I feel like that could have happened, but for whatever reason, it didn't today. And maybe it's because today the stock that was really in focus was DRYS. And obviously DRYS has been, had a huge day. It's up 100% on 84 million shares of volume. So this is a very thickly traded stock. There were a few good entries on the 5-minute chart, but definitely not one that I would want to trade on the 1 minute. And by the time I hit my max loss 4 or 5 minutes into the day, I was done. And I don't trade past the max loss, and that's the thing. When I hit that level, I'm done for the day. And that's for me the way I keep myself from going even further into the red. So yes, today definitely is exceeding my max loss, which was $1,000. I wasn't expecting that I would get into a trade that would drop so quickly, but it happened. And, I think this is one of the areas also where as a trader, it can feel like the market is kind of, working against us because we can work, so hard on having these consistent days, consistent wins, 200 here, 300 there, 500 here, 600 there, whatever. And then in one day, all of a sudden something happens, like you just get caught in one of these total sort of like freak pullbacks where you lose 75 cents like that, or you lose your internet connection. By the time it's back online, you're down 75 cents. And those all serve to, beat up your account little by little. And it just means you need to be extra disciplined to stay on your game because there are some things that we can't control. For the most part, we usually can control how much we're going to lose, but there are some times where you get overly aggressive, you take too much size, and you've suddenly increased your exposure more than you were expecting. And that's basically what happened today. So, again, it's part of the deal with trading that yesterday, even though I felt really good and I was happy about the day, at the same time, yesterday was just another day, and today is just another day. it's a red day, and hopefully tomorrow I'll be able to bounce back. But I'm not going to try to make back everything I lost today on my trades tomorrow. I'm just going to focus on one day at a time, the $500 goal. And if I can make $500 tomorrow, that'll be a good day. And if I just keep that up by the end of February, I will definitely be at the $25,000 mark, and I'll have hit my first, that first line in the sand. And I am really eager to get there, which maybe was part of why I was a little more emotional on my trades today, holding longer than I should have, or chasing when I really should have just waited for the first pullback. Now, if I had waited for the first pullback on RGSE, there obviously wasn't one, so I wouldn't have traded it at all. And I may not have taken any trades today because there really wasn't a lot that looked good. The only thing was DRYS on the first 5-minute pullback, which would have been an entry at 433. So that's the only thing that I saw that looked decent. And other than that, it's been a fairly slow day. And now we're kind of in the lunch hour. So I think I'll just, today's a day I'm looking at my calendar where it's like just yesterday, biggest win of the year, today, biggest loss of the year. Same stock, shows there was a lot of volatility there. I got overly aggressive. Maybe I was too aggressive yesterday and again today. And so paid my dues a little bit, but fortunately finishing, between these 2 days net just under $3,000, and that's good. $3,000 a week is fine. I'd prefer 16 to 20, but that's okay. This is not bad. The big picture is that this is about the marathon. It's not about the sprint, and it's okay to take a couple steps back to regroup, get yourself refocused, and then get back on the horse. So this will still be my biggest month in over a year, right around $42,000. But it's kind of bittersweet because of the fact that I was up $55,000 yesterday. So that's a reminder that I'll be carrying into next month, and hoping that I can stay focused through early February, trade the best quality setups, be aggressive on the best quality setups, but also be smart about my entries and to really avoid chasing things. I'd say that's the biggest thing. And that's the real lesson from today, is not to give into that fear of missing out. When you miss the entry, you just got to wait. Don't chase it. So that's the thing that I really kind of screwed up on today. And, I can beat myself up about it, but it's not going to change the day. It's not really going to help me be a better trader. So the better thing to do is to make this experience a lesson to help me trade a little bit better tomorrow, and a little bit better the next day, and a little bit better in February, and so on. And that's how you improve your skills as a trader. So yeah, I started this morning at 22,000 in equity, minus 5,600. I'll open tomorrow around 16,600 or something like that. So it's obviously a step back, and I'm just going to focus on rebuilding, one brick at a time, and getting myself back up towards 20, and that's fine. My goal this week, actually my goal this week, before I obviously had that big day yesterday, was to do $3,000 profit, 3,300 for the next 3 weeks, and that was going to get me on track to hit 25,000 by mid-February, by President's Day weekend. So I'll kind of just shift back to that goal, and that means between Wednesday, Thursday, and Friday, hopefully I'll be able to make another $1,000 or $2,000. And next week, 3,300. The week after, 3,300, and then I'll be at 25,000. And this is, good for you guys to see. I think if I was able to make it from $500 to $25,000 without a single red day, as awesome as that would be, right? That would be awesome. At the same time, it would not have shown you what it looks like to have a loss and to struggle, to feel frustrated, and to deal with those emotions. And that's something that almost every trader, especially beginner trader, is going to go through. So having this red day recap in the middle of this challenge is important, and it gives you another perspective. It's easy to talk about the winners. Talking about the losses is what can be more challenging. And That's the thing. Every day we're doing these recaps at lunchtime and going over the wins and the losses because I want you guys to really be along on the journey to see this whole experience. And that means that when there's red days, we'll talk about them, and they may not be fun, and I may have made mistakes, but you'll be able to really sort of see the market as best as you can through my eyes. And that's my hope. So I'll finish the month here up, whatever it is, 17,000 plus or minus 16,000. I'll total it up once I've got my statement for the month, and I'll probably in our Friday recap give you my monthly stats. But I'm finishing up from $582 to or $83 to 16,000 something, and that's by itself definitely an achievement. If you told me that I would be able to do that in 1 month, even 3 months ago, I would have been like, I don't know about that. Because last year when I did a small account challenge, I took $1,000 and turned it into 8,600 in 1 month. So I doubled my return on half the account size. So quadruple return. I mean, that's pretty good. And hopefully we'll be able to see continued strength as I build this account through 25,000, shift back into my speed trader account, and work my way up towards 100,000. But there will be bumps along the road. I'm sure this won't be the only. I guarantee you will not be the only red day recap. We'll have others. We'll talk about it. We'll go through them, and I'll make sure I answer questions that you guys have. So on that note, do you have any questions about the one trade from today? Josh, question about DRYS. When I traded DRYS at the initial pullback of 385, where's that pullback that you're looking at? Are you looking at the 1-minute chart? I don't see it on the 5-minute right here. Yeah, I sold not in a market order, but as a bit on the bid, and my order got picked up right at. It actually took the entire order, 7,700 shares, right at 575. It wasn't in blocks; it was just the whole thing gone. So it was picked up the whole thing right on the bid. Let's see. And Andre, I don't set stops before my entries. Today is one of those days where, I might question that technique, but I don't. When I get into a trade, I have a mental stop, and 9 times out of 10, I'm able to stop out quickly. This year, I've traded with I think something like 60% success. I've had lots of losses, lots of small losses, a couple bigger ones, but for the most part, they've all been fairly small, and that's all using mental stops. But I do have these losses today that got a little out of hand, and a mental stop wasn't as quick because I got a little emotional. And so I decided instead of just pressing the bail button to hold a little bit longer. And that was obviously a mistake, but it is what I did. Yeah, so I bought RGSE. I got filled at 9:30 in 2 seconds with my 200 shares. And then I filled at 9:30 and 20 seconds and 9:30 at 23 seconds at 650. And then I sold at 9:32 and 33 seconds at 575. So when I go to sell my position, I can see if the order is going to get filled or not just by looking at the status of it. And that one is one that just went out immediately. But I didn't know if I was going to get more slippage on it or if it would just go immediately. Those times I can see them in my broker window. So for those of you that are on Facebook, you can see them right there. Well, the $6 profit target that I had on RGSE this morning was only because yesterday's high was 583. So I just figured that the whole dollar, the next whole dollar would be logical. And I think, that's like I was sort of saying, the best entry on this would have been right here at 550 for the break of the previous day's high. The problem is it kind of just squeezed up too much before the bell rang. And so then by the time the bell rang, we were already kind of going parabolic, and it just ended up being sloppy. And we've seen this happen before. And I was using limit orders to jump in the trade. My entries were all limit orders with an offset 5 cents above the ask. So that allowed me to get filled. Well, I guess I didn't get filled my whole position, but that's because it jumped so fast, I think from 6 all the way up to 610 or 620. It just moved above the top of my limit order before I had a chance to get much, except for the 200. Well, I was thinking based on my entry at 6 that my stop was going to be 580, 590. And then once I saw it, surging up, I think I was just like, I'm just going to jump in. It looks like it's going to go right to 7, 650 to 7. That's kind of what it did yesterday, 450 to 5. So I'm just going to jump right in. And then all of a sudden, it pulled back really fast. No, Matt, I've got to switch back and forth between the two. So my commissions today, $80 in commissions and $46.20 in ECN fees. I'm not even really sure how my commissions got that high, but I guess just multiple orders at 450. Not sure. So Cami, DRYS, I didn't trade that for 2 reasons. One, I was below my max loss, so I just don't trade past my max loss. So that's number 1. But number 2, even if I wasn't below my max loss, I wouldn't have traded it on the 1-minute time frame because it's too choppy. It's very crowded. Right now we've got 87 million shares of volume. So there's a lot of traders that have a very, very, very strong short bias on this, and that think this stock is going to go right back to zero or head that way. It's just been reverse split, reverse split. So there are a lot of traders that when this thing pops up, they're shorting it, and that makes it more difficult to trade because you have such heavy resistance overhead. But having said that, clearly it's showing strength. It's up 93% right now, and the cleanest entries would have been 5-minute pullbacks. So on these types of stocks that are more crowded and a little more difficult to trade, I focus on the 5-minute time frame, and that usually works well. I think that just following the narrative on social media and some of the headlines we've seen on DRYS, it's pretty clear there's a lot of people that have a very strong short bias on it. All right, guys. So I guess we'll wrap it up there today. And of course, we'll be back first thing tomorrow morning, 9 a.m., pre-market analysis, building the watch list. Hopefully we have something I can kind of sink my teeth into and, get a nice trade, but I'm not going to force it. If there's nothing that looks good, I'll just have to play it smart and kind of sit on my hands for a couple days. I'd like to, of course, get right back on the horse and start to rebuild, but I have to trade the best opportunities, the best setups. So we'll see what the market's willing to give us tomorrow. Hopefully there'll be something to trade, and we can get February off to a good start. All right, guys. So I will see you all first thing tomorrow morning. All right. Thanks, guys.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing